Good morning, Fractal Effects team. Please make sure you read the disclaimer. If you're following along with us today, make sure you're doing a demo account because this is for educational purposes only. We are not financial advisors and this is not financial advice. Please make sure you check us out on fractaleffects.com where we teach algorithmic trading with high probability. Our goal is to make you 75 to 80% accurate. Today we'll be looking at NAS and ES. Let's jump onto the charts. So this is the last candle left in our range formation. And it's right in the New York fair value gap. We will most likely see a rejection here. We're hoping to get a upside confirmation today. Those aqua lines you see are painted out from yesterday's range, Tuesday's range. We're sitting right in it. Overall, we are still bullish on a higher time frame. Seeing a lot of gesticulation there. A lot of wicks off the 20, off the 50. We already had a crossover. Still waiting for confirmation. Today might be a quick one since we're at the top of the range and we're, like I said, right at that New York fair value gap. Keep in mind all the important areas of interest are already painted out by the indicator. The only other one that we use is the EMAs, which in the next iteration of the indicator, we might actually even just add those in just to make things easier for people. Just don't want to distract with too many lines, but obviously that is important. Again, we're right at the New York fair value gap. Range has been formed now. We will most likely get a confirmation soon. The range is not that big. We'd like to see an upside confirmation and then a drive to at least one standard deviation, which will be our low-hanging fruit for the day. There's a lot of people, keep in mind, once you've mastered this strategy, there are a lot of people that take earlier trades just because, again, based off of probability, we know for a fact that the probabilities increase once we get a confirmation signal, which, as mentioned before, in the next version will be automated. And again, this is why we wait for confirmation. You never know when it's going to drop, when it's going to sweep. So we just hit the 50 there. We are now below the New York fair value gap. Still rejecting. 2 minutes left. What they're doing is they're punishing people who went in for a long here. One minute, 37 seconds left. If we see this close within this range, then again, that's another candle that's bounced off the 20, the 50, and back into the fair value gap, which is another indication we might be going long. But again, if it closes down here and it bounces off the bottom of the fair value gap, or bottom half, I should say, then it could push down. Now this is the 7:30 candle. There was, I believe, some partial news that dropped, if I'm not mistaken. At 7, or sorry, I should say 10:30. Crude oil inventories. Remember, news is really just a smokescreen for them to reprice the market or to sweep out any equal relative lows or highs. This is a good sign that we are closing back inside the fair value gap. 17 seconds left. Our bias is still primarily bullish, but again, we're waiting for confirmation. Always wait for that confirmation. That's when your probabilities are at its highest. Once we break this range, there is a 80% chance that we will not break the bottom of this range. Then we can start actually comfortably looking for a trade. Starting to push higher now. Four minutes left. Still just gesticulating. Bouncing off the bottom of that fair value gap now. By waiting for the confirmation, we get past all this stickiness, all this consolidation, all these tricky moves. Right now, they're engineering new liquidity. This is a pivotal point. There are people going long and people going short. There we go. As mentioned before, we were looking for an upside move. Now we want to see this candle close outside this range. 3 minutes left for the range. For the confirmation. Excuse me. Two minutes left for us to get that confirmation. And 1 minute left for this confirmation. Remember, this is another key area, so we could see some rejection here, but here come our standard deviations have been painted on by the dynamic indicator. As soon as we break to one side, that's the side that we get the standard deviations on, just so it doesn't clutter it up, make it messy, hard to read. "26 seconds left." And again, we want this confirmation to stick. This is a pretty big candle, so we might see some retracement right after. Still pushing a little higher. Let's see if we can't get that retracement. It's a big fair value gap that I left behind. Outside of the New York fair value gap, that's the only fair value gap that we have right now in the 5 minute. So this becomes like a big area of interest for us. So we're interested in the midpoint of that fair value gap. The consequence encroachment. And again, the indicator paints those areas out for you, but you want to make sure you spread them across, just so you know where the midpoint is. Again, we're also working on adding in the midpoint in the next version as well. We want to make this as easy as possible for everybody. Literally paint by numbers. Confirmation, our main areas of interest, and then like I said, we might even add in the EMAs on the next iteration. These are the three primary ones that we focus on, the 20, the 50, and the 238. That thing is driving. We've already taken out previous day's highs. Already at one standard deviation. Now again, if this thing takes off and leaves without us, that's okay. Sometimes they do that. There's no way to get in. No point in getting FOMO about it. Yes, also driving. Remember, there's an 84% chance that we will retrace back into the range itself. That's when we look for our our opportunity. That's the whole point of fractal effects trading. Algorithmic trading. Algorithmically speaking, it's got to retrace back here, or at least 84% chance. This turns out to be one of those 16% chances that it doesn't. That's fine, we can live with that. I want to see it come back, tap the midpoint, maybe even come back and hit the 20. This time we're looking for a decent retracement. That is a big fair value gap that it left behind, and it's still driving higher. So if this closes in 22 seconds, this might even be a breakaway gap, which makes the probability of this being accurate even higher if price retraces to it. So we've already hit the low-hanging fruit, which is 1 standard deviation. There we go, another fair value gap is forming. So if this turns out to be a breakaway gap, then it could retrace here, hit and go. Now what we don't want to see is it reach its full potential. So according to our data on the back end of Fractal Effects, today's extension is most likely 1.2 to 1.3. So if we hit 1.5 before a retracement, our probabilities do decrease as far as how far this thing will extend. Then we might just, depending on how far the retracement is, we'll check to see if we actually get our rejection pattern, and then we'll see if there's enough room for growth here. We want to make sure we at least get 1 to 3 risk to reward, because we might just be aiming for top of the range. So if it hits 1.5 and turns down, let's say we get rejection here, then we're only aiming for the top of wherever this pattern ends, because it's already hit 1.5. Again, this is all explained in our Learning Hub on the back end to Fractal Effects. We are probability traders. Any trades we take, we make sure we're at least 70% accurate. Anything lower than that is gambling. Got to treat this like a day job. Starting to get that retracement now. Sure, this is going to take a minute. By the time it hits the midpoint here, we'd like to see this 20 kind of come up as well. I want to see it touch both, wick at least the 20, and then we'll drop down to a smaller time frame and actually look for an entry. We are currently working on a higher time frame swing strategy as well. Sorry, I should say we're working on putting together the videos for that. There we go, slowly coming into the range. We'll switch this now to NAS as well, and drop down to the 1 minute. There's that same fair value gap. Already pushed past the 20, hitting the 50 now. The 5, we're close. Remember, it's got a lot of fair value gaps here now. So in order for me to now want to look for a buy, I have to see green candles. I have to see fair value gaps on the right side now. This thing has to look obvious that it wants to push up. I want to see rejection on the 5-minute. We're at the 50 now. There we go, drive through. Might even want to sweep these lows, we'll see. But we're back at the New York fair value gap. Very important area. I want to see green candles now. I want to see a fair value gap on the right side. Again, most people just jump in because they see a wick or rejection. That's not good enough. Could keep driving. Our probabilities only increase once we start seeing a push to the upside. And again, if this breaks our range, we're done for the day. It's a false day. That means this is one of those days where the probabilities have decreased and they're more on a search and destroy mission. By they, I mean the market makers. So now we've closed outside of that fair value gap on the 1-minute. The 5-minute, we have 3 minutes, 46 seconds left. I think it's driving. It's about to hit the fair value gap. Remember, the opening gap here, the important gap for New York, is painted out on 3 different time zones. The 5-minute, the 1-minute, and even the 15. I don't think we have one on the 15 today, if I'm not mistaken. Yeah, too many big candles. And days like this, I mean, again, if it keeps driving and we close below our range, it actually makes it easy for us. Because at no point did we see any entry. And we got a false day. We're done for the day. This is going against probabilities then. So right now we are sweeping the lows. Two minutes, 37 seconds. Remember, we have to have a candle body close in order for this to be a false day. We've swept the lows formed at the beginning of the New York Open. Now we're getting a rather big wick. On the 1-minute, we not only hit New York fair value gap, that's London's fair value gap that's coming in on the red on the 1-minute. Tap that. Now we want to see green candles. We want to see fair value gaps being created on the right side now. One minute, 49 seconds left. Again, if this closes over the range, we're done. Just like we can have days where we find our setup quickly and we're in and out. On the other end of it, we can actually have these days where it breaks our rules and we're also done. We don't want to be in a market that's actually going against all probabilities. It's our first green candle. This is a pretty erratic day. All you got to do is go to a higher time frame to see that. Look at that. We have one big green candle up, one bigger red candle down. So we might get a false stay. This might just be their way of faking everybody out and then pushing down. It's already swept previous day's highs. We've hit the top of Tuesday's range. 45 seconds left. 30 seconds left, actually, sorry. Get a candle close here, we're done. This is officially a false day, which makes it easier for us. Just go on with the rest of your day. Do what you got to do. You can check out the Asian session, which is, I believe, formed at 8:30. And we might start peppering some of those sessions in as well. We'll see. Definitely for our users on the back end. We'll see if we're going to start publishing those on YouTube as well. So we did not close, so we're still in contention here. But as mentioned before, I want to see definitive drive. See now that we have a brand new candle formation. So this thing could go all the way down and still close within our range, and as long as the body of the candle closes within the range, we're still in contention. Still at that London fair value gap. Nothing of interest yet. Closer to calling it a day than anything. This thing has to look obvious. I want to see a drive. I want to see green candles. I want to see green fair value gaps like this being formed to the upside. In which case we would aim for probably 1.5 standard deviations. Closing in on 11 o'clock. Still just waiting. Starting to see some formation now. I want to see this candle close and leave this fair value gap open. We're still in contention. We have not closed over the range. This is one hell of a push down though. So probabilities do decrease when we see moves like this, erratic moves like this. So this has now become an area of interest, but at the same time, we're well below the EMAs. We could easily drive through those. This is usually not a pattern that I'd like to see because we're below the fair value gaps, New York's fair value gaps. So it's going to gesticulate here. Right? We've seen that before. where it just bounces between the main fair value gap and our gap of interest here. And on the 5, we're approaching the 50. Let's see what it does here in this fair value gap now. 30 seconds left. Remember, if it leaves this gap open as well, then this becomes an even higher probability. Oh, I closed it almost immediately. There's some people be looking for an entry here. I want to see at least this candle reject, and I want to see another candle engulf this. Then that might be an interesting play. Again, very erratic day. Proceed with caution. Wait for candle closures. And keep your stop losses close. 2 ticks at the lowest. Still waiting. And then obviously, as mentioned before, top range, 1 standard deviation would most likely be our goal. That gives us a 6.46. But again, I have not seen, if anything else, it's driving through. We're back at London's fair value gap. What we wanted to see was full rejection and then another candle engulf this candle, which we did not see. We're at London though. As soon as we break this, which we just did, that goes out the window. It negates all this. This could just be a turtle soup where it just sweeps one last time before pushing, but again, probabilities decrease. We don't want to see that. Because the second you see it turtle once, it could turtle again, which is something we saw yesterday. So probabilities decrease. Now, this candle did close. They are closing in that same range. I thought it was going to close down here. See how fast a candle can pull back. So we are getting wicking happening in that same fair value gap. Again, until I see an engulfing candle to the upside, the probabilities here are low. And the fact that we just swept this, that decreases it. We're past 11 now. This would be an area of interest now. This turtle is the only thing that's actually turning me off to this trade. But It is a good trade, high probability still. I'd keep stop losses tight just in case. Again, technically should not turtle twice, so if it does, then they just created that chaotic pattern just to trap people. Still 4-1 with the higher entry, tighter stop loss. Remember to include your spread on your take profit. And as soon as you hit 2 risk to reward ratio, which is here, pretty much at the consequence encroachment of the fair value gap, that's when you move your stop losses to break even and take some winnings off the table. So as soon as we hit the consequence encroachment here, we want to see displacement now happening. It's leaving fair value gaps, that's a good thing. We want to see those fair value gaps stay open. We want to see this drive past this 20 and right into the consequence encroachment, which will make this a safe trade. That is what we want to see. We want to see it drive now. On the 5, we're up against the 50. We want to see it get over the 20, over the 238. We want to be on the other side of that 238 now, as quickly as possible. It's been moving fast today. Erratic pattern, but if you look at it, it's quick to get up, quick to get down. Now let's see if it's quick to move back up again. There you go. That's what we want to see. We want to see it push now, drive, drive. As soon as it hits that midpoint of that fair value gap, we immediately move our stop loss to break even. We take some off the table. We're officially in a safe trade. And then we let it ride to the top range. It's 1 standard deviation again. If it was any other day, we'd aim higher, but a little too deep, a little too early. There's been a lot of erratic patterns today. Play it safe. Now this is an area we could see some gesticulation. Again, we're against the 20 or against the 238. Those are powerful rejection points. And the market uses those to scare people as well. So we could see some dip, but we want to see it drive through. The faster we see it drive through this, the faster this thing will most likely move to topside. Again, bit of gesticulation. We want to see it push through. Still just waiting, just gesticulating at that area. We want to see it drive now. There you go. That's what we want to see. We want to see more displacement candles. We're back at that fair value gap of New York. This is going to be another area where it could just gesticulate for a minute. Ideally, we don't want to see it reject from here. We want to see it drive. Just a little bit more and we're officially in a safe trade. A little bit further. Anytime you see a turtle and you see it close immediately back into the range with, again, an engulfing candle, which didn't come immediately. We did see another one kind of poke out, but this means we're still in contention. We did not break bottom range. Just got to proceed with caution though. We want to see this drive past this fair value gap now as quickly as possible and hit that midpoint. See if those line up actually. These are two different fair value gaps on two different time zones. So here on the right hand side is not the same fair value gap over there. That's much higher. That's at the top of this. This is a 1 minute fair value gap. That's a 5 minute. But as soon as we hit this midpoint, we're officially, again, in a safe trade, and we're going to take a certain percentage off to secure our position. Now we're getting some pushback, obviously, from this fair value gap, the 20 EMA on the 5, which we expected. Now, keep in mind, the longer we stay here, our probabilities decrease, so we will, depending on how long we stay in this New York fair value gap, we might move our stop losses up higher faster. But again, the goal is right here. As soon as we hit this dotted line, the midpoint, that is when we move our stop loss to break even and take some off the table. We're already above that fair value gap now. That's a good sign. We want to see it start driving now, quickly as possible. Close, but moving slow. We want to see it drive now. Come on, just a little further. As soon as it hits this, we're good. You should be well in profit. So this is 2 standard deviations. All the way to the top of this range is 4.1. Sorry, risk to reward, not standard deviations. Again, since we're at that New York fair value gap still, it's going to take a minute. We are above the 20. We're on the other side of that fair value gap. That's a good sign. And as mentioned before, the longer we stay in this area, the quicker I would move that stop loss to break even, just to make sure our position is protected. On a day like this, where you're seeing these long, quick moves, sweeping liquidity, top, bottom, search and destroy, it's better to just be safe. I'm hoping if in the next 2 candles this does not tap the 1 minute, in the next 2 candles, if it does not tap the consequence encroachment of the fair value gap, I am moving stop losses to break even. So 2 minutes. So if this candle does not give us what we want, again, officially moving stop losses to break even, and maybe even taking some off right there. Do not like to see it gesticulate this long. I will still leave a runner to the TP, but I'd rather be in a safe trade sooner than later. This is why most traders fail. You want to make sure that you're managing your position to the best of your abilities. There you go. So you never know that if it could dip back down here and then take it back up. And it's using this fair value gap and this 20 EMA, using that opportunity to create more positions. Then I could come back and tap us out. That's fine. We're already in profit. We've already moved our stop loss to break even. On any other day, I would let it run, but coming this close to bottom range, gesticulating in the wrong areas this late in the game, it's better to just protect your position. As mentioned before, we are probability traders. Our moves have to be high probability, 70% or higher. And even though we are still in contention and still most likely to hit the top of this range, you don't like to see some of these moves happening. This was the pullback. We don't want to see another pullback happening. Just gesticulating. Now we're on the other side of that fair value gap. These are signs we don't want to see. Another reason why moving this stop loss at this late in the game was a good idea. Higher probability to protect our position. Now we're officially in a safe trade. I would have liked to have seen it hit 2R, but it should not come back into this fair value gap. Should not need to. I want to see this gap. It's already been traded into. I want to see it stay open though. Otherwise this thing could turn and head back down. Close in on 11:30. Ideally, I want to see it hit this consequence encroachment at or before 11:30. That will let us know that this thing is moving up, at which point we will just set our TP and call it a day. Patiently watching now. Back close to the 238. did get an EMA crossover here. Could use this to push down. Bouncing off the 50 EMA. We do not want to see it drive through this. We'd like to see this candle essentially close within this fair value gap above the 50 EMA. Remember, just because we're in a safe trade does not mean that we don't want this to still turn out in our favor. Five minutes till 11:30. Still driving lower. Again, it might just be one of those days where it's just seeking and destroying tops and bottoms. We're also in a big fair value gap here on the 1 minute. So we close slightly outside of New York's fair value gap. Now we're back in it, the brand new candle. As soon as we take these tops, that's a good sign. But we want to see this happen with force. We want to see these tops taken. We want that midpoint hit. And once we get out of this range, then we know that we're most likely heading to 1 standard deviation, 1.2. So our algorithmic dashboard literally said 1.2 standard deviations. Between 1.2 and 1.3 standard deviations is what the market has done over the last 20 years. We're already close to that anyways. Pretty much right around there. I guess it's already done 1.1, close to 1.2. So it's rejecting now, again, off that 20 EMA. Still between the 50 and the 20 and this New York gap. This is where they're going to most likely hold it for a minute, but we want to see a push. 3 minutes from 11:30. Slowly pushing up again. We're getting that gesticulation in that area. pushing down. We do not want to see it hit that New York fair value gap again. Coming down. We're still bouncing off that 50. We want to see this drive through. So it did close off this fair value gap, which is something we were hoping to not see, but we are above the 238. Still bouncing off of that. We start seeing candles wicking to the bottom side of that. This thing might want to push down, but we're still above the 50 EMA. Past 11:30 now. On days like this, once you've moved your position to break even, you should actually feel comfortable just walking away. Your TP is set, top range. Depending on what chart you're looking at, just make sure you set your TP. Don't forget your broker spread to include that as well. Your stop loss has already been moved to break even. It's better to just walk away if it hits your TP, or if it hits your break even, you've already taken some money off the table. You're already in profit. There's no point in watching all this because I will not be looking for a second entry at this time. If it comes all the way back down this deep, this late in the game, our probabilities decrease and we're not interested. We're now below the 20 EMA. We're now below New York fair value gap. Just move this out of the way. This is the low I'm referring to. It should not need to come back and sweep this low. So if it does, then there might be a chance that this thing just wants to push down. But as mentioned before, we're already in a safe trade, so make sure you check us out on fractaleffects.com. Today's Wednesday, so we'll be live again tomorrow. We're live Tuesday, Wednesdays, and Thursdays, 10:30 to 11:30. We see that push happening now. Could just bounce off this and push up. It's already swept the low here. So again, no point in watching all this back and forth. It's going to hit your stop loss or your TP, regardless you're in a safe trade. We'll recap some of this tomorrow, but have yourself a great day. Make sure you hit the subscribe button and turn on your notifications so you know when we're live. We'll see you guys tomorrow.